Let's bring in our next guest. We're going to talk about trade, tariff agreements, everything that we've been hearing this morning. Roger Altman is the founder and senior chairman of Evercore ISI. And Roger, thanks for coming in this morning.
Thanks for having me.
We were just looking at some of the energy stocks with Dom that are trading up pretty sharply on what Europe is potentially going to be buying in terms of energy deals from the United States. But it's not just that. It's also defense and technology that have done pretty well under this, not just from this agreement, but from the one that's been potentially struck with Japan as well. What's your takeaway?
Well, that's true, and that's positive for energy and defense over the medium term. But let's step back for a minute. Mm-hmm. So Trump is like a magician at the circus. He thunders, he blusters, he threatens, he sets deadlines, he changes the deadlines. And it's very dramatic. And then, presto, he pulls a 15% tariff deal out of a hat. And everybody goes, whew, wow, I thought it was going to be worse. Let's buy stocks. Except that it is not good for American consumers and business consumers. Because eventually, and that's not going to take all that long, the tariffs will be passed on, dollar for dollar, to the consumers. And that will mean less consumption, less growth, less jobs, and less profit. And right now, it's hard to see any of this in the data because inventories were increased in many places to hedge against the tariff impacts. Some places, supply chains were tweaked. And yes, certain producers and retailers are absorbing the tariffs for the time being. But that will not last. And they will eventually, it's a certainty, be passed on. But and therefore, it's not good for
So
for
net,
the US
net, it's not, you know for a fact this trade deal is not going to be good long-term for the United States and Europe.
I don't think so.
Just because of inflation, aren't we able to see
growth?
Doesn't it open up some of the markets in Europe to our people? And doesn't it maybe cause some onshoring that could be good? Doesn't it raise some money through the tariffs? You like taxes. You love taxes. It's just a tax, right? Just a tax on either corporations or one or the other. And you can see the proceeds are growing and growing. I'm just saying, I don't think there's any way you can just definitively say long-term this is going to be a bad deal for Europe and the United States. I don't think you know that.
Well, you know, the issue of time frames is important. So, yes, there may be eventually, yes, increased production onshoring in the United States of certain types of goods, which are susceptible to being produced here. Baseball hats are not, for example. That's going to take 3, 4, 5 years, depending on the instance. That's a long time. And in the interim, these negative effects are going to assert themselves.
If they eventually show up, right? We haven't seen
which
yet.
They will.
Are you more worried about inflation, or are you more worried about the slowdown in the economy as a result?
Well, let's talk about both. Let's talk about both. So, pre-Trump, the consensus forecast.
Confetti left over.
Yeah. The consensus forecast on GDP growth for 25 was 2 to 2.5%. Now it's 1 to 1.5%. Goldman Sachs, for example, just out last week, 1.1%. Core PCE looks like it's going to be about 3% for the second half, up substantially from the consensus. This is not my numbers. This is, really good macroeconomic departments. So you can already see that it's having a negative effect on growth and a negative effect on inflation. Excuse me. Now, Joe, 5 years from now, we may see some positive impacts on increased U.S. production. And yes, like you said, buying that amount of energy over 3 years and buying U.S. defense production, those are good things. But net, is this good for the U.S. economy? And the answer is no.
So why does the market keep hitting new highs?
That's the mystery. That's the mystery. And when I ask some of our smart people at Evercore ISI, who are 100% focused, whose job is to assess markets, technicals, fundamentals, and so forth, their answer is the market wants to go up. Now, some of it is...
The market always wants to go up. It would like to go up, if possible.
Well, no, but there are periods when the bias is just upward. And there also are periods when it's downward. There's a lot of AI enthusiasm. We all know that. But it's a mystery because at the margin, the markets, in my opinion, should react negatively to this.